Hi, Warriors. Let's finish the month up strong. Who's with me? How you doing, Paul? Michael Weissman, Sinatra, team. Everyone doing okay? I guess we should be aware of month-end flows. Why don't we start with this Dixie Weekly? Everyone doing okay? See my charts?
Good morning. We can see them.
Hey, hi, Stel. A long time. Nice to hear you. All right. So the dollar to me looked trapped between the breakout we had last week and the 50-week moving average coming in around 105.60. So anyone have a bias of which way it's going to come out? Stel, what do you think? If we had enough of this dollar rally and it's going to be a failure? So here's that breakout area.
Well, I was talking about the 103.50 for a while. There you go. You have that trend line.
Yeah.
And so we've broken out. So we are now in breakout territory as far as I'm concerned.
Okay.
We do have the highs. Where was it? The 50 weekly?
It was about at the weekly moving average.
Yeah, where was that?
It's right there around 50.
Okay.
10, so only about 40
Yep.
pips around above here. So
that's the previous high pretty much as well, right?
Right.
From June, 104.60 or so.
Right.
So that's a target. If somebody wants to fade this, I think that's probably the level to try it. But if you ask me in terms of a more medium-term direction, I think the dollar is going to be going lower. But for now, and especially if risk off goes a little bit further, then the dollar theoretically goes higher. It all hinges on Powell, on rates. The Jackson Hole last week, Powell said nothing really different. They want to fight inflation, et cetera, et cetera. And for me, the more how should I say it? The more determined a central banker sounds, the more likely I think is things are going to start going the other way. Especially, remember they were determined, inflation is transitory. It went the other way. Now they're all saying inflation is going to be high and yields are going to be high for longer. I'm really tempted to think the opposite. But for now, the dollar's broken out. 10-year US is also it took out it reached new highs. It's now come back a little bit. That is also on an uptrend. But for me, the main picture remains, as long as we have inflation not moving higher, and I don't think it will. I think we're going to keep grinding lower, and as long as central banks don't continue to hike like crazy, and I think the Fed's done. The ECB and the Bank of England probably have a little bit more to do. As long as that's the case, and we're not going to see, huge amounts of tightening coming forward, I don't see how yields can remain high. But, in the short term, we have a breakout in the dollar and yield, so we have to respect that.
Okay, the way I'm looking at yields now is I finally agree with you. Last week I said I wouldn't be long up here, and I think it's highly probable that the high is in and that yields are going to start working lower. And what was interesting to me was, you see how the 10-year made a new high? The long end did not make a new low. So here you go. Here's the long end. Oh, so you can't see the other low. So here we are here, held the 90 low, put in a reversal week compared to the 10-year that made a new high, took out this prior high. So I'm getting a message from the bond market. I know everyone's real bearish, and I thought that, we would take out these lows because of this confirmed low. But last week was interesting how the bond started to act good during a little bit of risk off. So this could be a higher low. I know a lot of people have been looking for a bottom, and in the bonds for a long time, like, everyone's talking about the positioning is so, short that I'm starting to think that we could put in a higher low here and make a run, especially if we get another round of risk off. And the last thing I want to say about the dollar is I know cable's rallying, but we have, I have to give it, see if the breakdown is real that we had last week, but I wouldn't be short if we start taking out 2620. This looked like it was going to be a major breakdown. So far, hardly any follow through. This was a Jackson Hole. We tried to rally, but still closed below it. Looks like it wants to test it or, trade above it again, which would make this a false breakout. So, but, I have to stay with it until we start taking this out. And, oh yeah, for the Juan guys, and I'll move to Kman if he's here today.
Hi, I am.
Okay, buddy. So I know you're probably talking about month-end flows going to be a factor here today. I mean, this week.
At the start of the week, right? But it should start in all earnest on tomorrow, because then we trade value day end of the month. But then it just looks like it started a little bit in the European morning fixings where the euro was slightly beat, but now it's like not reversing. But I think from tomorrow it's going to be full swing month end. And yeah, I mean, the banks are expecting dollar buying into month end. Let's put it that way, and I don't disagree. So if you want to look for, I'm not saying a reversal, but if we want to look for a peak in the dollar, perhaps when Thursday may be a good idea to have a close look at the dollar.
Okay. The Juan's interesting to me here, Kman, because last week was an inside week, within the previous week's range. So far this week, we've held last week's lows. If we take out last week's highs and then start taking out the early week lows, I think you could declare, correction time.
Yeah, that's very possible. What was interesting, though, is that in China they've put new measures again to halve the fees paid on equities. So it made the Chinese equities rally, but then that fizzled out pretty quickly when Evergrande reopened after months of being offline, and lost 75 or 80% straight away. Yeah, which is logic, with everything that happened. But the fact of being back above 730 and holding that 726.5, 27 is still looking positive for me right now. But yeah, we can't ignore what's going to happen. And again, I think it's going to be a case to see where we are end of the week. And in the meantime, PBOC is still fighting hard against, they're not intervening, but still putting fixings quite low. And so for today, if ever dollar China would run up to 732.90, 733, we have to be a bit careful with it, because that's the top end of the dollar CNY band, allowed band. So that's one there.
What about the yen here, buddy?
Cable, as you were showing, it's a break, but it's an attempt, right? So still for now.
Yeah, you mean the breakdown?
Yeah, it's an attempt right now. I'm playing it because we had 4 or 5 lows before, and where we end up, my risk is extremely limited, just above 30, 35.
Above the breakdown.
But for dollar yen in turn, we didn't get anything from Ueda. Even on the contrary, he said that he justified the fact of keeping the monetary policy as is right now. So that reduces some expectations for the next Bank of Japan policy meeting already again. So I'd say that if my assumptions are correct for month end, I can see this dollar yen break up and try
48.
48, 49.
Okay. All right. Looks that way. So if that happens, okay, so this would be an interesting setup. So if we get to those levels that Kman's talking about, and the 10-year puts in a failing rally, that's going to be a pretty important tell for yields, I think. So we make a new high in the end, trade 48, 49, and we can't get above 430. I would, attempt shorts there, or, do something on the long side of TLT.
Yeah.
If that happens. So
yeah, again, look what's going to happen into month end. That could be if the yields move higher without too much fundamental reason, because let's face it, Powell didn't give us much, right? Then it may be month end as well flows, and all of a sudden the bid could come in TLT, or the bottom, not the bottom fallout in the yields, but just staying where we are, or coming off just a little bit. That's all possible. So I'd say just watch what those 2-3 first days, and don't forget on Wednesday we have the European CPIs as well, which could throw a bit of markets around. So it's, I'm going to be cautious, but I still like the dollar until Wednesday or Thursday perhaps.
okay, you mean because there's a full moon, a super moon?
I don't know. Is there a silver moon?
Yeah,
I don't
yeah.
know. Is there?
Wednesday, yeah.
All right.
I think that all right. So you have, in fact, it's going to be a blue moon month, 2 full moons, and in the same month. So
have you seen the seasonals? I usually don't trade seasonals at all, but people are saying that September is the worst month for indices, for equities, S&P and stuff of the year.
Yeah. Well,
Barry,
I don't think we do any better than 4,500 if this is just an ABC. I mean, I think you sell rips. Maybe look, all the big guys are coming back next week, and if they want to short this market, well, they've been gone during much of this decline. Who knows? They could still be trading, but they could engineer this recovery. They'll take the market up so they could get short, or take it down so they could buy it. But maybe we get up to 4,500, but I'm still bearish.
Yeah, I like that trend line. I had it last week around at 44.80, and I miserably missed the run up to 70. I really was a bit too conservative, but yeah, I think
that was halfway back. So 45 is 61.8.
Yeah.
So we'll see. See if
yeah,
that
that's
could
it.
happen.
I'm in that kind of thing. I'm more like, I feel like a table tennis ping pong player at the start of the week, and then as you say, next week the big boys are back, and then when the boys are back in town, we will know a bit more, right?
The Boys Are Back in Town was a great tune.
Exactly.
Remember that?
Yeah, absolutely.
All right.
To quickly reply to Barry R, we're talking about 148, not 48%. I don't know what 48% means.
Anyway, people buy headlines today, sell newspapers tomorrow. We were talking about the, NVIDIA coming in about 70 higher. So this was the last one. The semiconductors look pretty lousy, and that's an important group for stocks, are the semis. Most of the people that when they get bullish, semis are a favored group. But so NVIDIA put in a higher high, and semiconductors put in a lower high. So I think we're going to take out these moving averages. A Dem, when I interviewed a Dem, he was thinking that semiconductors, he takes like shots at looking for, big contrarian moves, and everyone loves semis up there. He says there's just a ton of semis out there, and the only thing that would change it would be an invasion of Taiwan. Then you take 60% of the semis off the table in global supply. So, an invasion probably is bullish semis, but that may not happen for another year or two, or hopefully never. But the banks still look bad to me too. So I'd sell rips and financials, and gold is trying. I still think that we have some more left in gold, and you really have to respect how well silver has acted. But I'm still not in the camp that we're going to blow to new highs on this rally. In fact, I don't even know if we'll take this out. I might be looking for shorts sometime next week. We'll see. But this will be back up the truck time for me. If that happens and we still get the count that Blake was looking for. And then the other big trade for the fall would be if Blake gets his 102 level in euro, which is 61.8 back right here. I still think this can happen, and most likely because of risk off. So that's it, guys. You know what I'm thinking. How about you, Blake? I'm sorry I didn't watch your week ahead if you did it.
I did.
Okay.
And good morning.
So,
good morning,
buddy.
Good morning. Happy. I was looking at the bank holiday. Happy summer bank holiday. Is that what it is?
You mean the banks are closed
Kman,
today?
so happy summer bank holiday.
Something like that, mate. Something.
Is that what it's called? That's what it's really called though today?
Yeah, I think so.
Oh, summer bank holiday. That's interesting. And good morning, Stelios. Thanks for being here today.
Morning.
Good morning. Good to see you. One of my monitors is going out, which is it's on the fritz a little bit, but I'm back. I'm happy about that. It took a little while for it to fire up this morning and get the I had to go feed the hamsters and get them running. But anyway, yeah, I did. I talked about the week ahead video. It was out a little bit late this week. Dale, I had a tournament for my son, so I was unfortunately. Well, I say unfortunately, his team won, but it was an all-day tournament. I didn't think they were going to make it, so I figured I'd have been back and been able to film the week ahead video early, but no, that didn't happen. Anyway, I'm still looking at the US dollar or the euro is a really pivotal level right around here. And by the way, Kman, you were talking about the dollar yen going up to 148. The top of that channel comes in right around 148, 149. It's an ascending. Yeah, it's an ascending channel, and the bull flag reaches a little further towards 150. So I think anywhere up here is realistic, and it seems like
the harmonic allows for it too.
Yeah, I mean the harmonic patterns are approximations between like in this example would be 127% extension to 161% extension. So you're looking at a target from 148 to 150 in change.
Okay. Yeah.
So and if you take the C leg, which is this leg, you got a 261% extension, takes us to the channel resistance exactly. So I think that's all doable, but Kman, it's all about the Bank of Japan and Ministry of Finance, right? I mean,
yeah, somewhere. But then you have, as I said, the radar didn't give anything to the bulls at all. And then at the same time, you've got those officials also are talking about stimulus package again here and there. And I don't know. I mean, how and then at the same time, we have to still acknowledge that whether they change or not, the speed looks to be very, very slow. And then you have yen trading at the yen 10s trading at 0.65%, where the US 10s, for instance, just to name those. are above 420%, let alone stuff like the mix, which is at 11%.
Yeah, it's still very, 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 very low and unattractive. But but then again, that's when the BOJ or the Ministry of Finance could just step in and start, talking just to adjust, to catch the markets off kilter a little bit. But anyway, but there's the dollar yen. That's kind of my view. It's just, it seems like the inevitable is up here. What's that?
The yen turns when rates turn and give back and rates correct.
Absolutely.
What's your look like on say 30-year bonds? Because the 10-year made new highs in yields and the long end did not last week. I'm wondering what you're thinking there.
Yeah, well, it's the same thing, right? It's just really critical support. Everything is divergent. You can even see this right here. This is a daily
That's
chart.
interesting. So the
yields,
I mean,
that's divergent, right? And yields,
made a new high.
But still divergent.
30-year didn't. So that's that's something different that we haven't seen for a while. I think they're smelling a risk off period here, and that's going to be what's behind why people will buy the yen, because of lower yields and safe haven buys, and during risk off during September, October, November.
Yeah, it's possible. I mean, well, I do think then, Kman, you mentioned seasonally September is a bad month. And I mean, we could go back and just take a real quick look, and then I wanted to go back to the euro really quick. I'll come back to that here in a second. Let's go. This is a week. You know what? I'm going to do a chart that I don't do a lot of drawing on, and let me just get rid of this for a second. Let's delete this, and let's go over to a monthly chart really quick, so we can really see longer term. And let's zoom. Let's adjust it. Here we go. So I'm going to do this with you guys really fast, just so we can get a quick view of this. And I'm going to grab my rectangular box. This will be good. So let's go to September. Okay. This is September, October, right? September, October. And then we're going to go to September, October, right? Here's September, October here. Then September, October. And okay, so we're gonna, here's September, October. Okay, just over the last 5 years, right? So you had September, then bounce back in October. September, sell off, bounce back in October. September's up here, September's up here. September is a little bit of a sell off, and then a rally back in October. So you can see just over the last 5 years. Now, obviously we can go back and do like September, October would be somewhere down here, down September, up October. So you can see seasonally, there is some, validity to that argument that there might be a bit of a pullback in the month of September. I would also argue that this month, actually, I'll take that back, not this month. This year maybe is a little bit different than the years past, because our trajectory for years past has been straight up since the GFC and unlimited quantitative easing, and rates going to basically zero and staying at zero. This is the first year that we're seeing a little bit of a lower high after a prolonged run. So seasonally, I think that we could have a down September. I just don't know how aggressive I would be looking to buy a dip. And I do think that this month or this fall, we're going to have a much harder time going higher. Maybe not so much in December, because just for the Santa Claus, Christmas holiday, whatever you want to call it. I think that that's going to be a little bit little bit of a bounce area for the markets. But I think that if economic data does indeed start to show some slowing, not only in the U.S. but globally, then I think we might get a sell-off in September, but it might actually continue into October, November, depending on the data. So, you know, and I'm going to go back and reference this one chart that if you just go and look at recessionary periods since the 1970s, and you go back and look at the periods that we have had recession and just go look at it from a chart perspective, the sell-offs that we get tend to happen during a recession. So that's the big risk, you know, and I think that's going to be the question on everybody's mind. Do we have a recession going into this fall or not? Because if we do, that's probably what's going to be the catalyst that weighs most on equities, you know, moving forward. So I don't know. It's going to be an interesting fall. You know what I think is going to be. Oh, go ahead.
Got to watch the leaves. When the leaves start to really fall, then sell it, you know.
Yeah, you know, I think so. You know, I'm not I do like seasonals, and I don't like to be a nonstop bear, but I do think that we are, you know, I think a recession is somewhat inevitable, and I use the analogy quite a bit that we've had a mega year party, you know, just years and years and years and years of a party, monetary policy party. And this is the first time that we're seeing restrictive monetary policy. And, you know, we're not getting the response that the markets are looking for from the Fed or anybody else, that rates are going to really come back down. And as long as that's the case, it's hard to be an equity market bull going into a seasonally bearish period. So the way I'm, you know, hoping to play it is, you know, play some downside over the next couple of months and then look for a rally as we head into November, December. That's kind of the way I'm viewing it. How about you, Dale? What do you think?
Yeah, I mean, I think that 4,200 is going to be another battleground, but yeah, I think that's a viable way to look at it. The surprise would be a sharper decline, I think, would be the surprise. I think the consensus narrative, you know, like I heard Katie, who, you know, she's a great technician, and most people are saying this is just a correction. It'll last a few more weeks or so, and then the bull market continues. So that's a viable option, and, you know, pretty powerful rally. So I think what 4,100's 4,200's about 38% back or something like that. You know, it's possible.
You know, one of the things I've learned, and Dale, I know you know this, and Kman and Stellius, actually, with all of our experience combined, we've probably got about, just the four of us, we've probably got about 150 years worth of trading experience between just the four of us, which is crazy in itself.
Yeah.
Right. It's a lot. I would argue that, you know, this week we're probably going to end up rallying. You know, I know we have data coming out this week that's going to be a you know, driving force, obviously, with the jobs data and everything we get, you know, month end and everything else. But I've always learned you don't want to short a dull market. And today is Monday, and there's no economic data on the horizon today. The UK is out, so I'm assuming, and we're hitting, you know, highs in the futures right now on the S&P futures. I wouldn't be surprised if the S&P, you know, rallies back to, you know, the 4,500 level this week.
Yeah.
As we recover. Yeah. So.
Yeah. Good.
Yeah, that's the way I'm kind of viewing. Somebody asked if I'm long the euro or somebody's long the euro. I'm long some euros down here. I think the euro is at a very critical support, and I'm only up 19 pips, and, you know, from Friday. We're at really critical support. If you saw the week ahead video, it's like channel support, 618 retracement. I know it's critical, and I know there's going to be a lot of dollar volatility this week, especially going into, and Kman mentioned it. I know I talked about it on the week ahead video. We have inflation data in the Eurozone on Wednesday. I think that's going to be a driver. We also have JOLTS jobs reports tomorrow. We have consumer confidence tomorrow here in the U.S. We have ADP non-farm. We got preliminary GDP out of the U.S. this week on Thursday, and then Friday we're going to have jobs report and PCE too, which the Fed obviously looks at pretty closely. So anyway, lots of things that can drive currencies.
Where's DSI in currencies, Blake?
Are you not getting that? I keep forwarding. Oh, well, you know, all you have to do is jump over here to the ForexAnalytix chat room and go over into the news and research. And I post it there every evening for our traders. And I have to go back to Friday. Sorry, there it is. So this would be Friday, I believe.
Okay.
So yeah, the dollar's
30.
at 88, which is, you know, obviously getting a little stretched as far as bullish sentiment goes. So I just realized time's up. Who do you have for an interview today?
Nobody.
Oh, not James Henry?
He's Wednesday, Thursday. Just a mental error. I forgot to fill in those 2 days.
Oh, okay. Well,
calendar.
Good. Then we're still here. Then let's I'm sorry, I didn't mean to talk all that time. But let's go through around the horn and see what you're thinking. So Stelios, since you're here, it's good to have you. Are you still here, or did you split?
He's gone.
He is gone.
Just us.
And it's funny. I thought Steve was here, and Steve just left too.
Yeah.
So Kman,
they're having a rendezvous.
I know you said it earlier, and kind of the things that you're looking at with the US dollar, Japanese yen. But how do you feel about the dollar overall at current levels? I mean, we're pretty stretched, and you know the dollar has, in my opinion, has extended further than I thought. But as I pointed out on the week ahead video, the case I made for the dollar is, even though the dollar index is breaking out, if you look at the euro, we're at critical support, right? We're at the 200-day moving average, 618 retracement of the entire range, channel support. Aussie dollars at major weekly support at the 64-cent level. The Kiwis at the 618 on a weekly basis at the 59-cent level. Even the sterling is flirting with the 618 retracement, and you know, breakdown, yes, no, I don't know, you know, pretty damn close. You got the Swissy that's up against channel resistance. You know, the big breakout's obviously in the dollar yen. And but how do you feel about the dollar as in general? Like, you look at the dollar, are you a buyer up here after such a big move over the last month?
No, but I mean, okay, I am actually long dollars, but I think it's going to be about the timing, and I think it can stretch until the end of the month, and then we will have like, okay, starting Wednesday, really, right? The data dump coming
ADP,
out, across the pond. I think.
Oh, yeah.
All else equal, we can see a bit of an additional stretch into Wednesday, and then on Thursday, last day of the month, we will see. I'll probably be very cautious then to see what's going to happen once September starts, because we can't rule out that last domino, which is or one of the last dominoes, which is the jobs market, all of a sudden start to show a bit of weakness. I think it's JP Morgan also who expects a lower number than expectations. They think 125 instead of 160s or so expected. And then we could see the dollar all of a sudden starting to change direction a little bit, because if the jobs market starts to show weakness, then I think the party in yields may be over for a while. That is what I'm looking at this week.
Can I ask you a question about inflation? I mean, we got inflation data in coming up obviously in the Eurozone on Wednesday, and that's going to kick off potentially some pretty big moves. Do you think that the Eurozone is going to be dealing with more of a deflationary period or a stagflationary period, or do you think that they're going to have fairly sticky inflation, kind of like the UK and the US?
Well, the thing is, I don't know exactly when those base effects are going out of the market, which are keeping the Eurozone inflation up right now. We could have another month there, or perhaps even two, if you take August as one and then September as another one. But I think sooner or later that's going to come off. But it could remain sticky, in which case, if you look at the European data, we could be talking about stagflation, right? Because the economy didn't grow, at best 0.1 or 0, in some areas in the Eurozone even negative. I don't think it's really good for the euro, but it's hard to, let's say, it's hard to fight the ECB right now, because then when you listen to Lagarde, she didn't give us much either. Both camps could say like, oh yeah, she was a bit dovish because she is not that hawkish anymore, but then she didn't give anything to the real doves either in the euro that they could be done. So she's much more neutral. So I think it's a bit difficult to trade the euro for me. But if put again to my head, I think we are at the end of the stickiest inflation, or coming to it, and I wouldn't be surprised if that translates. I don't know whether it's September or so in a euro that could go and test the 105s or so.
Yeah, and maybe that's it. It's maybe the inflation is not so sticky, and the euro, slips, and we see a combination of risk off that Dale's talking about, which I don't disagree with you, Dale. On that, we see a little bit of risk off, and inflation continue to slip in the Eurozone, so it's more deflationary, and it allows the dollar to actually catch a bid, for a couple different reasons, right? And that gives the dollar the resumption.
Yeah, I think, Blake, we're going to at least 108, whatever happens short term.
The dollar?
Yeah.
Okay.
Well, and 109 is possible. That's 61.8 back from the high.
So and I just want to point this out. Technically, what you're saying, Dale, and I just want to make sure that everybody can see this. This is you can see higher relative strength. This is on a daily basis in the dollar, right? Yeah. So we have a breakout in the dollar. We didn't break out in price, but we broke out in strength. So that's actually bullish.
Yeah, so, confirmed it. Yeah.
It did. So, and that means that any pullback in the dollar, whether it's back to 103 or maybe 102.50, that should be bought. Right?
Amen.
Okay.
All right.
And that could very well happen if the seasonalities are correct.
I would love that.
Look, hey, we're all on the same page. I like that.
Yeah.
But I mean, that's the one thing that I think we need to respect about the dollar is this breakout, as you just pointed out, Dale, it is confirmed. Does that mean you're guaranteed win here? No, but the probabilities are now,
never the case.
Yeah. There's never a guarantee. It's just the probabilities have now shifted pretty good in the favor of dollar strength. Is it a little nerve-wracking trying to buy the dollar here on this as it's overbought on a daily basis? Yeah, I think the wiser decision is waiting for a bit of a pullback, which would probably mean the euro maybe rallies back to 109, 108.75, something like that, and then look for a reload and move higher in the dollar.
Yeah. And you have to respect the pound breakdown under 620. But now that I've heard Kman, I'll be at least taking partials into Wednesday, and if I'm still not stopped out on the short side of the pound. Euro pound looks okay from last week. That's why instead of being short euro, I'm short pound.
Go ahead, Kman.
Strong bounce. I find it really a strong bounce. I didn't think actually that it would bounce over 1% from the lows, because if you look at the data between the Eurozone and the UK, it did not really. Okay, you can have the counter effect of those UK PMIs, but in the EU PMIs were anything nothing to write home about. I find this a strong bounce of the 85 in the euro sterling.
That was.
Ye-
It was a weekly. Take a look at a weekly. It was a nice reversal week to the upside.
Yeah, and so this is one of the charts that I actually posted in the chat room this morning. Is we're just struggling at the 618 underside of this trend line. So, you know, I was also saying that I don't know if we're going to get above the 86 pence level until we see a look at the inflation data come Wednesday. So, you know, because there's no real data coming out of the UK this week, unless it's something I missed. Which
no, I haven't seen anything like to that could really drive it.
Yeah.
There is the house price index coming out. There are some the manufacturing PMI is coming out, but that's on Friday. No, until then, you know, I don't see anything that's going to change the face of the globe in sterling. Yeah, the mortgage approvals, M3, perhaps, yeah, have a little bit of those yields moving on the back of it, but no, there's nothing really strong in sterling coming out this week. So it's a lot of it is going to be month-end stuff now.
Right. So I'm with you. I'm with you there, Kay. So I you know, it's hard to see. The driver is going to have to come from the euro in this case, and that's probably going to come down to that inflation data out of Spain and Germany, and you know, on Wednesday. So anyway, great conversation, guys. And I know it's Monday, and I know it's a holiday. It's bank summer holiday in the UK. Kman, I'm thankful for you being here. As I said this morning, I'm like, oh, it's a holiday this morning in the UK. I was actually surprised that you were in the chat room, not because well, just because a lot of people in the UK are away from the computer. So nice to have you here.
No problem.
And Dale, we don't have an interview today, so I think we can probably just sign off.
Okay, so everyone, you know, tread lightly in this thin environment, and you know, wait for the market to be back for, you know, full strength liquidity beginning next week. So, you know, just trade cautiously, don't swing for the fences, and don't just count your pips, count your blessings. We'll keep you informed as best we can during the week. I think you got a lot of good analysis today. Replay this if you know, were not concentrating, because I think there were some good macro ideas here, and you could take advantage of them and join. Maybe this is a good time to join. Not maybe, it's a good time to join the community. You have when markets are quiet, it gives you time to learn to navigate and get to know the people in the chat room, so that you're prepared for what I think is going to be an historic September, October, November period coming up. So anyway, these are, you know, these kind of markets don't happen all the time, not even once a year. So get ready and have guys like Kman and Blake there, and all the traders in there, and Ryan, to be able to reach out to them if you're unclear, and be able to watch the pros that this is not a hobby for, and immerse yourself, surround yourself with traders better than you. Okay, so do something for your trading career. That's my advice. Okay, buddy. Thank you, guys.
Thank you, Dale.
Yeah, thanks, Dale.
All right.
Thanks, Kman.
Yeah, so we'll see everyone for Turnaround Tuesday, and Blake and the team in a half an hour on the Morning Edge. Join and catch this Morning Edge, where you see the bias chart and even more detailed ways to take advantage of what's happening here today. So good luck, everyone. See everyone tomorrow. Adios, Blake and Kman. I'll see you guys tomorrow.
Ciao, Coach.
All right. See you in the room, everyone. Adios.